You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 16th day of September, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. So it's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. We'll get your indicators up and indicating today. Your trial will officially start tomorrow and will run all the way through next Tuesday. You get 5 consecutive trading days. There's no credit card required. And you're not just gaining access to the live training room, but we treat you like you were already a member. We give you access to everything for 5 consecutive trading days. Again, no credit card required. We want you focused on what's being taught. We want your mind in learning mode so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. So again, when Michael joins us top of the hour, he'll walk you through step by step. It's a piece of cake, take you 5 minutes. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere, on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you have access to the question box. So you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,900 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to, but it is a great resource to have at your fingertips, and again, it lets you actually see how we've evolved over the years. Again, we've been around since 2005. It's a long time. So there's a lot to explore. youtube.com/CFRN. This is the schedule for each afternoon broadcast. Michael will join us at the top of the hour for a recap of what happened this morning in the live training room. And we'll do a little live trading on the TradingView platform. We're going to dive into our daily devotional, as we always do. The topic that we're on right now, we're in day 4 of 5. Reset your mind. Overhauling toxic thoughts. Today's scripture is Colossians 3:2. I'm going to share it from the NIV translation. Set your minds on earthly things. Set your minds on things above, not on earthly things. There we go. Now it makes sense. Fixing your thoughts. Here's a quote from Joyce Meyer. When we fill our thoughts with the right things, the wrong ones have no room to enter. Testing our thoughts and learning to take them captive is a huge part of the mental battle we have with our thoughts. So when we can learn to do that as a regular practice, we will, over time, gain control over our thoughts. But what if we chose to be more proactive with our thoughts in order to prevent reacting later on? There will still be thoughts that have to be tested and taken captive, of course, for we are not perfect. We can, however, choose to follow through with Paul's exhortation in Colossians 3:2, which says, set your mind on things above, not on earthly things. In setting our minds on things above, we will have less thoughts that need testing and being taken captive. When we set our minds, we are striving for something and directing our mind toward a certain thing. This verse says we shouldn't set our mind on earthly things. Those earthly things usually distract us and cause our thoughts to keep us from God's best. There are plenty of things we see every day that are out of our control. But much of what we see can be prevented. What we put in front of our eyes is a big deal. If you feel that you have too many toxic thoughts, what is it that could be causing them? Could it be things on TV, social media, the news? It's wise to analyze the things we are viewing daily and ask God to show us what would be a good thing to decrease or eliminate altogether. Much like we need to watch what we put in front of our eyes, we also need to consider what is going into our ears. What we hear affects our thoughts just as much as what we see. Have you noticed that what types of music, books, or podcasts possibly cause toxic thoughts in your mind? Are there things you need to include, not just remove, that will build you up and help create healthy thoughts instead? The tragedy that happened in our nation last week serves as a very great example of this. The hatred and the vitriol that rose up in young men who should have been outdoors, enjoying life, reaching for the best, getting an education, starting their careers, were in these very dark chat rooms talking about some very dark and sinful things. And look at the tragedy it ultimately led to. This is serious business. Instead of focusing on and setting our sights on things that could cause toxic thoughts, let's be proactively mindful of what we choose to put in front of us. When we choose things that honor God and keep us pure in heart, we will have less thoughts to test and take captive. Reflect on this between today and tomorrow. What tends to be your struggle? What you watch or what you listen to? List the biggest thing you need to eliminate from what you normally watch or listen to. Chances are you already know what it is. Give it up for 21 days and see what a difference you see in your thought life. We'll wrap up this topic tomorrow, day 5. Let's pray. Heavenly Father, help us lift our eyes above the distractions of this world. Teach us to set our minds on what is eternal, where Christ is seated at your right hand. Keep our focus on your kingdom and your will, so that our lives bring glory to you. In Jesus' name, we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 122 points. NASDAQ down 18. S&P 500 down 9. Russell 2000 down 12. No movers, no shakers. Things are pretty quiet ahead of the FOMC tomorrow. Now, we've talked about this quite a bit, and personally, I'm looking for a buy the rumor, sell the news. Yes, we do expect Jerome Powell to give us a quarter-point interest rate cut. He could surprise with a hat, but I don't think so. But you never know, it's possible. Either way, if we get the quarter we expect or we get surprised with a half, there'll be an initial pop, but I think it's going to lead to a very serious correction. I could be wrong. This little Energizer bunny just seems to keep on going higher. Well, what do they say? The bigger they are, the harder they fall. We'll see what happens. Now, for traders, it's good news because it's going to bring a lot of volatility into the markets. And as a trader, that's what you need, is volatility, so that you can take advantage of the movement. Investors, don't freak out. Everything will come back. Well, I can't say everything. Stocks can go to zero, but the indices never will. That's how they're designed, to always go higher over time. How's that possible, you ask? Because they're constantly reshuffling the deck. The S&P has 500 large cap companies. The Dow has 30 companies, blue chips they're called. The Russell 2000 has 2,000 small cap companies. But they're always shuffling the deck, removing the weak, bringing in the strong. So yeah, there'll be sell-offs, there'll be dips, there'll be corrections. But over time, those indices will always go higher. Just look at the historical chart since the beginning of any index. You'll see what I mean. In the commodity basket, crude oil up $1.17. Trading 64.47 last. That's a gain of almost 2%. Gold up $3.20. Trading 37.2220 last. Silver down 16 cents. Trading 42.80 last. In the Asian markets at the close, the Nikkei posted a gain of 134 points. Shanghai gained just over 1 point. The Hang Seng dropped 8. And in the European markets at the close, FTSE down 81, almost 1%. The DAX down 419, 1.75%. The CAC down 78, 1%. So we had a mixed day in Asia. It was a red day for the UK. And so far, it is a red Radio Tuesday here in the US of A. This would be what they call the turnaround Tuesday. Up yesterday, down today. But the day's not over. But again, I'd be very careful with any trades between now and well after the FOMC announcement tomorrow. The FOMC announcement will come at 2 p.m. Eastern. That will create a wave of volatility. The big volatility will come at 2:30 when Jerome Powell steps up to the podium to answer questions from the audience. The best position? None. Be on the sidelines. Watch the action down on the field. And when things get back to their normal rhythm, that's when you want to get back in the water. Treasury Secretary Scott Bessent said yesterday the U.S. and China have reached a framework for a deal to allow TikTok to continue operating in the U.S. Now, if they had said they had reached a deal, I wouldn't put a lot of stock in that. But that's not what they said. They said they've reached a framework for a deal. So I put even less stock in that. Percent said the deal entails two private parties, presumably TikTok's Chinese owner, ByteDance, and a U.S. partner. He did not share further details. President Trump will meet with the Chinese leader Friday to close the deal. The announcement came ahead of tomorrow's deadline, requiring ByteDance to sell the social media company to a non-Chinese buyer or face a U.S. ban on national security grounds. Congress deadline was originally set for earlier this year. Trump has extended it multiple times. TikTok has over 170 million active U.S. users. That's about half the U.S. population. Separately, China's regulator said an initial probe of AI chip company NVIDIA, we talked about this yesterday, showed the California-based company had violated antitrust law. Talk about the pot calling the kettle black. After all the intellectual property theft China is guilty of over decades, I can't believe they have the nerve to point the finger at NVIDIA, but, well, here it is. The regulator pointed to the company's 2020 acquisition of Israeli-American Mellanox Technologies, but did not elaborate further or indicate possible penalties. You know what? I don't want to deal with China. I don't want a trade deal. I don't want any kind of deal. I don't want anything to do with them. We'll do just fine on our own. China needs us a whole lot more than we need China. Russia needs us a whole lot more than we need Russia. So, I guess choose your sides. Leading AI companies OpenAI and Anthropic published separate studies yesterday on how their chatbots, ChatGPT and Claude, are being adopted worldwide. Users are increasingly using ChatGPT for personal queries. According to OpenAI's analysis of 1.5 million conversations collected over nearly 3 years, over 70% of conversations are non-work related, compared to 53% last year. ChatGPT is also gaining popularity in lower income countries, with adoption in the lowest income countries over 4 times higher than in the highest income ones. Anthropic's analysis of 1 million conversations from August found the use of Claude highest in high-income countries, where users increasingly use the chatbot to refine work and learn. In contrast, lower-income countries whose economies are manufacturing-oriented are more likely to automate tasks with Claude. Claude usage trends in the U.S. mirrored state economies. Travel planning popular in Hawaii, and IT queries frequent in major tech centers like California. World of AI, and it's just getting started. All right, got some Oracle news here. Oracle up as much as 5% earlier today. Now it's up, less than 0.5%. This was based on the U.S. and China reached preliminary TikTok deal during trade talks in Madrid. Like I said before, we have nothing close to a deal. We have a framework for a deal. So, of course, initially, and that's just what I think we'll see with the Fed announcement. Initially, there'll be much ballyhoo and things will pop up. But then, as clearer minds prevail and the emotion is taken out of the equation, we're going to see something different. Treasury Secretary Scott Bessent said at a press conference yesterday, as I mentioned before, the two countries have agreed on a framework for a deal. Supposedly, the Chinese president and our president will complete the agreement on Friday. Or Trump will do what he's known for, close the deal. And no matter how he closes it, nobody will be happy. Now, some people will, but the majority will find some fault. U.S. stocks pulled back slightly from record highs today as the Federal Reserve kicked off its September policy meeting. Remember, the FOMC is a two-day event. First day is private. Second day is when they make the announcement. President Trump is pushing to make the first day where they actually do the discussion and each Fed governor gets to argue their case for lowering, not lowering, how much, etc. He wants that on public display, like on C-SPAN or something. I think that's a good idea. In an otherwise light week on economic data, today investors received the latest figures on retail sales showing strong consumer spending despite sticky inflation and a wobbly labor market. Retail sales in August rose 0.6% from the prior month, triple the 0.2% expected. In a troubled economy, does that really happen? I guess it does. Right? At least it seems to. Apple's latest watches hit the market in 3 days, September 19th, with a number of meaningful upgrades. The $259 Apple Watch SE3, the Apple Watch Series 11, which is $399, and the Apple Watch Ultra 3, which is $800, each get more durable displays and 5G cellular connectivity. But the marquee feature of this year's lineup is hypertension notification. One more thing to keep you stressed out. Only available on the Series 11 and Ultra 3, though. Apple said the feature could potentially alert up to 1 million people who show signs of chronic high blood pressure within the first year of its availability. Navigating the process of dialing in the right medication for my recently diagnosed hypertension, which makes the Series 11 and Ultra 3 especially intriguing. I've also got sleep apnea. Now, I'm not speaking about my own self. I'm speaking about, this is what the person who wrote this article said. I've also got sleep apnea, which all of the watches can now detect. I'm a real peach to sleep next to at night. Apple said hypertension notifications, which you have to opt into, work by using the Series 11 and Ultra 3's built-in optical heart rate sensor. It will also work with the Series 9, Series 10, and Ultra 2 via software updates. Like I said, one more thing to stress you out and send your blood pressure higher. All right, gold. Now we're talking physical gold. Hit a fresh record as investors bet on a U.S. Federal Reserve rate cut this week and weighed the scope for more monetary easing in the coming months. Bullion rose above $3,700 an ounce for the first time ever, supported by a gauge of the US dollar falling to the lowest level in more than 10 weeks. While a rate cut this week is already priced into the markets or baked into the cake, Fed will also release its quarterly update of economic and rate forecasts, dubbed the dot plot, and Chair Jerome Powell will hold his post-decision news conference. And that's where you should really look for the volatility. You know, gold is up more than 40% this year, outpacing major assets such as the S&P 500, and recently surpassed its inflation-adjusted peak reached from 1980. Persistent trade and geopolitical uncertainties, along with purchases by central banks and inflows into exchange-traded funds, have added to the momentum. Goldman Sachs has forecast bullion could approach $5,000 an ounce if just 1% of privately held treasuries shift to the precious metal. Gold's up 120% over the last 3 years. And last, from Wall Street. The U.S. is sanctioning a pair of Iranian financiers and more than a dozen people and firms across Hong Kong and the United Arab Emirates for allegedly coordinating $100 million worth of cryptocurrency transfers from the sale of Iranian oil for the benefit of Iran's government and military. Treasury alleges that Iranian nationals facilitated the purchase of over $100 million worth of cryptocurrency for oil sales for the Iranian government. The pair then used a network of front companies across countries to transfer the funds. So-called shadow banking networks like these evade sanctions by laundering money through overseas front companies and crypto. Treasury Undersecretary for Terrorism and Financial Intelligence, John Hurley, said in a statement that the U.S. will continue to disrupt these key financial streams that fund Iran's weapons program and malign activities in the Middle East and beyond. To authorize the sanctions, the U.S. used an executive order that President Donald Trump issued in February, called the National Security Presidential Memorandum 2, which calls for the U.S. to drive Iran's export of oil to zero. It also states that Iran can never be allowed to acquire or develop nuclear weapons. It's a pretty good idea. All right, on the home front. Logic 247. That's our 24/7 around-the-clock Emini alert service. We're currently in week 372, which is a little over 7 years. And over the last 372 weeks, we have issued over 20,400 individual handcrafted alerts. In fact, I think last night we hit 20,500, I think. Now, Valerie did the recap this morning at 6:30 a.m. Eastern, so some things may have changed since then. Of course, she will update the recap this afternoon, early evening, as she does each day. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 20 alerts. At the time Valerie did the recap, we were still waiting on the outcome of 11. So that gave us 9 actionable alerts of which so far nothing has stopped out. But again, it's just Tuesday. Now, the logic alerts all have an entry price, long or short, an initial target designed to help you get your goal for the day, additional targets, and then a final trade to target. The real purpose of the logic alerts is to help you learn how to read a chart. If you want to learn how to trade for a living, you need to know how to read the chart. Plain and simple. Even if you don't actually trade the logic alerts themselves, because let's say they trigger at 3 in the morning off the London Open when you are sleeping. That's okay, because you can do some forensic analysis and go back and look at the market structure when it triggered at the price that was in the alert, and you can follow through exactly what happened. The more times you repeat that process, you learn how it works, you learn how price flows, and then you can go look at any chart, any market, any time frame, and do the exact same thing. It's never been simpler to learn how to read a chart. And we hand it to you each and every day. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. 372 weeks, obviously that's a very long time. But years before we had Logic 247, we had our original alert service, the concierge trade alerts, which we still have. But they're different. Again, the logic alerts have an entry price, an initial target, additional targets, and a final trade to target. The CTAs are just targets, and they don't come out around the clock. They're typically posted 5 minutes before the Globex Open each evening. We're in the Tuesday session, but it began last night at 6 p.m. Eastern. Tuesday session will end today at 5 p.m. Eastern. The Wednesday session will begin tonight at 6 p.m. Eastern. So all of our traders and trial members had all of these targets 5 minutes before the market opened last night. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So when you see, as we go through each of these markets and you see these targets on the charts, just remember everybody had them 5 minutes ahead of the open. So let's start where we always do, with the S&P 500, E-mini futures, the bellwether. And we have a new all-time historic high. Yesterday we also had an all-time historic closing high. It's really important. We had a high yesterday of 66.81 and a quarter. We closed at 74 and a quarter. So we closed a little off the high of the day. We opened last night and we made quite a run up, all the way to 66.96.75. We are now well off the high of the day and just off the low of the day. And that low of the day, I'll show you why price stopped there. Okay. Now, up here, I cannot look left and tell you why price stopped here. Okay. Because when you look left, there's nothing there because price has never been there before. Okay. That's why we use fib extensions. That's this tool here. Most are familiar with fib retracements. Okay, we are long overdue for a decent fib retracement. That's what keeps a bull market healthy. And this is looking so dangerous. But it is what it is, and it will come down. And if you're an investor, don't freak out, because if you're invested in the index funds, you don't have anything to worry about. Hopefully your individual stocks are good quality stocks, and if they are, they will come back as well. But remember, individual stocks can go to zero, but the index never will. That would mean all 500 companies went to zero. And that's not going to happen. Now, how do we get this price over here? It's very simple. You take all 500 companies in the S&P 500, and whatever price they're at this very second, you add them all up, divide them by 500, and that gives you the current price. Maybe you didn't know that. Did you? Now, every point when you're trading futures, every point in the S&P 500 is worth $50. So if you take $50 and multiply that times the current price of the index, that gives you the value. So let's go here. What do we got as a current price? Oh, we'll call it 66.65. So 66.65 times $50 a point. So if you purchase or sell one S&P 500 E-mini contract, you're controlling $333,250 of S&P 500 best of breed equity. Now remember, back in the day, you used to stay up all night scratching your head, reading through all these company reports, trying to figure out what's a good company, what's a bad company. Why do you even go to that trouble? If you're investing for the long term, let the professionals over at Standard & Poor's, let them do it for you. Remember, they're only going to put the best 500 companies, large cap companies, in the index. So they've already done the heavy lifting, and they're going to continue to work at it every day, shuffling that deck. Last week, we had 3 companies exit and 3 companies enter. Always removing the weak, always bringing in the strong. So, all alerts are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose years ago. And it's worked fine, so I've left it alone. The vertical line separates today, Tuesday. Here's Monday. Back over here is Friday, so that's not really important. This was the Sunday night open right here. Okay, that started this new week. Now the weekly trading zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published them now for the last 15 and a half years, a little over. Here's where we opened last night at 6 p.m. Eastern. Now remember, 5 minutes ahead of the open. All of our members and trial members had both of these targets. They had all the targets that you'll see on these individual charts. So we consolidated at the weekly trading zone. When price encounters a weekly trading zone, only one of three things happens. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When it does that and runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. So last night, it was just steady upwards. We had a little retracement here. We hit the long target, exceeded it by a bit. We actually hit 96.75. That's the new all-time historic high. But since then, price came back to the BBC. Now, the pullback to the BBC holds more often than it doesn't. Whether it's pulling up from below or pulling down from above. But eventually, it will trade through. Like here, it traded through. And then when it pulled back, the pullback held. Over and over, again and again. Now, when the black step line crosses blue and climbing, see how it's on the left side of blue and climbing here? Once that step line crosses to the right side, and we talked about this yesterday, we talk about it every day, price will typically retrace to the BBC. And the pullback holds more often than it doesn't. But eventually it will trade through. Now, yesterday, here's a perfect example of how the zones work. Okay, price dropped to the zone support, which sent it to the zone overhead resistance, which sent it back to the zone below support. Now, this zone is 66.43/44. This zone is 66.58/59. Okay. This is 74/75. This is 30/31. Now, just as when the step line crossed blue and climbing and we got to pull back to the BBC, right here we see that the black step line is crossing red and falling. So what do we expect? A retracement to the BBC. Again, the pullback holds more often than not. If this is one of the cases where price trades through the BBC, be very careful right here. This bearish cross, okay? That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance, at least the first time up. Okay? That's really important to remember. Now, you see this low right here from yesterday? That's this low right here. Now, we did punch through it just a little bit on this candle, but we quickly retraced. So this low from yesterday basically became the low for today. That low is 61.25. Yeah, and the zone's 58.59. So we missed hitting the zone by a couple points. Now, as this step line crosses red and falling, look for the retracement. But remember, price has to overcome this obstacle. So what may very well happen, price may travel up to the zone, and what happens 70% of the time? Consolidation. As price consolidates at the zone, the BBC will come down to meet price. Now, that's a different dynamic than when price rushes up to meet the BBC. But it could still lead to another leg to the downside. And you would look for potential support here, here, and of course, at the zone. And if it gets through the zone, then the short target. Going into the close today, it will if we really are going to see a buy the rumor, sell the news, going into the close today, we could see a lot of the institutional traders unloading their positions. We might see it tomorrow morning. I'm sure we'll see some of it overnight. But you never know, do you? Okay, here's where we opened last night. As you can see, yesterday, the market found resistance at the zone that was published yesterday morning at 6:15 a.m. Eastern. When price rallies up to a zone, we expect resistance. And when we drop to a zone, we expect support. Very simple. So we opened here last night, ran up to the zone, found the resistance, blue and climbing, turned to red and falling, and that took us all the way down to the short target and down to the zone below. Now, see how the step line? They were parallel with red and it was parallel with red and falling on the way down. It's now crossed. So what's happening? Price is retracing to the VBC. Pullback holds more often than not. Even this retracement here, right? That held because, now we almost hit the long target. We made it up to 46,332. But that candle is still touching the BBC. So it held. And the zone, published yesterday morning at 6:15 a.m. Eastern, held as support. We spiked it a little bit, but it held. So all the candles are touching. The Russell. Here's where we opened last night, and we immediately dropped. Well, in the second 30-minute candle, we dropped right to the short target, which is also part of the weekly zone, 2418/19. Hit it to the tick. Now that's based off this low right here from yesterday. See it? Market found support at the zone yesterday, and then we put in this higher low, and that's exactly what I used as the short target. Okay, that's market structure. So support will send the market looking for resistance, which it found. So first we hit the zone, consolidated, pull back to the BBC, the pullback held, and then off we go, right up to the long target. Again, all of our traders had these targets 5 minutes before the market opened. And this long target is based on what? Right here, this high, 24.33. See it? 24.33. Boom. The market has a memory. Resistance will always send the market looking for support. So down we go. We trade through this zone. We consolidate at this zone. The step line is crossing red and falling. So we'll get a retracement, most likely back to the VVC and the underside of the short target, and then potentially another leg to the downside. On the NQ, here's where we opened. And we made a pretty quick run. By 22:30, we had made it up to the long target, consolidated, managed to travel a little bit higher. But when the move ran out of steam, price comes back to the VBC, and see how it consolidated on the top side of that long target? But when you got red and falling chasing price, that's a good indication that this pullback may not hold, and it didn't. So we traded down all the way to the weekly trading zone to the tick. This zone is 24,499/24,500. The low of this candle is so we missed it by 3/4 of a point. I'll try to do better. So now that we're consolidating at the zone, which is what happens 70% of the time. See how yesterday it was resistance, today it became support. Okay, step lines crossing, so look for a retracement back up to the BBC. If we spike the BBC, keep in mind you got a bearish cross right here where that long target sits. Okay. Crude oil. Here's where we opened last night on crude, and we're above the BBC, but we didn't travel too much terribly higher. Okay. We did take out this high right here, but we didn't get on this first move. You can see where the long target is. Okay, that's based on this right here. Okay. So we came down to the short target. We got below the BBC, red and falling, chasing price. We consolidate at the short target, which is based off of this bullish cross right here. Remember, when you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And it was. Support sent the market looking for resistance. We made it up to the long target, got above it, and then on the retracement, the top of the long target held as support. The step line has now crossed. Surprisingly, price has yet to start the retracement. But now that blue and climbing is directly above price, that's going to act as potential resistance. So get ready for the move back down. Now this spot right here where it crossed, that could be potential support, 64.20. Once it gets below 64.20, should have no problem getting back to at least 63.90 or the 30-minute BBC. Gold. Here's where we opened. Okay. Traveled sideways. We got red and falling overhead. We're above the BBC, so we're bullish, thinking higher prices. So we do get a leg and a retracement. Pull back holds. A leg and a retracement. Pull back holds. Leg and a retracement, a leg and a retracement, a leg. And then we get a deeper retracement back to the BBC. And then we bounce right up to the long target. What was the high? Missed it by one tick. Now remember, it only takes a $1 move from 37.39 to 37.40. That's $100 per contract traded. So we found resistance at the long target that sent us back below the BBC. And we found support. Looking left, you would expect this area to be support, and if it traded through that, you would then expect this area to be support. Then your next area would be obviously the weekly zone at 3708/09. So we've pulled back to the BBC. Question now, is the pullback going to hold or not? It looks like if you start to see red and falling turn to blue and climbing, feel free to go long. But keep in mind this high right here, 37.32.5. I would put a target at 32. From 29, from 29 to 32. That would be $300 per contract traded. And then if you get above that, let's say 34 up to 40, that's $600 per contract traded. But right now, we don't know which way it's going to go. It's just kind of peacefully sitting there. And these are futures prices, but bullion hit a new all-time historic high. So, last but not least, silver. Here's where we opened last night. Consolidated at the zone. Blue and climbing, turned to red and falling. And we got a drop, seemingly out of nowhere. Now we would expect support down here at the short target. This is where the bullish cross happened. But this support right here, see that low there, that would have made sense, and that's where the low of that body is. But the wick in the middle, 20% of the time, market doesn't do the next high probability thing. So buying sends us up to the zone where we get consolidation. We hit the long target, and then we begin the journey back down that takes us all the way to the short target and the zone below, almost to the tick. We get a little doji, and price step line's trying to cross red and falling and work its way back to the BVC. Question then will be, does the pullback hold or not? So here we are with a new all-time historic high. Yesterday, a new all-time historic high and a new all-time historic closing high. Today, we have an all-time historic high again, but somebody's going to have to get busy if we're going to close up near the high of the day, because we're well off the high right now. And we got the Fed tomorrow, so. Michael's here. He'll give us a recap of what happened in the live training room this morning. Then do a little live trading on the TradingView platform. Then I'll come back, wrap things up with our good word for the day.
All right, here we go. Should be all right?
Yep, looks good.
All right. Good afternoon, everyone. Today is Tuesday, the 16th day of September, 2025. Now, if you've not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for this trial. Just click on that purple button and it will bring you to this registration page. On this page, just fill out the form. All right. When you fill out the form, all we ask for is your first name, last name, email, and phone number. Down at the bottom, we ask for your TradingView login ID. If you don't give us that, there's no way that we can set the indicators up for you. So you need to give us your TradingView login ID, and we'll get the indicators indicating for you as soon as we can. All right. All right. Results. We had a blue day again today, guys. It's our second blue day this year. Second blue day in 2 months. But it is what it is. You know, I ran out of time. I screwed up one trade, and that was really the difference. I had about 10 break-even trades. And so if I would have gotten what it took to get to break even on half of those trades, we would have been fine too. But it ended up, hang on, I'm trying to get down there. Here we are. We were minus $127.50 this morning, minus 37 on the NQ, minus 20 on the YM, plus 27 on gold, and minus 9 on the ES. Now, the minus 9 on the ES was a mistake. I stopped out and I shouldn't have. The gold was all good. The minus 20 on the YM, I did everything pretty much right on the YM all morning. And the NQ, I missed some really good trades on the NQ. And I had a ton of break-even trades across all of them. Well, not all, I guess the ES, I only had one break-even trade. But on gold, I had 2 break-even trades. On the YM, I had 1, 2, 3, 4. I had 5 break-even trades on the NQ. 2, 3, 6, 7. I had at least 3 break-even trades. Anyway, we're minus 127.50. We did get the goal for the day after 3 minutes and 2 trades. We're up $165 a contract. We're $16.50 with 10 contracts on. On the month now, we're at $8,432 over 11 trading days, averaging $766 per contract per 2-hour trading day. On the year, we're at $192,877 or 158 trading days, averaging $1,220 per contract per 2-hour trading day. Now, if you were to quit trading when you get the goal for the day and add 1 contract per month, you would now be in your 9th month. So you have 9 contracts on. And if you traded just like me, you would have only had to trade 22 hours so far this year, and you'd be up $125,312. Sorry. Averaging $5,674 per hour, if that is what you did. Now, that's how the day went. So we'll get into the trades here in just a minute. Now let me shut this off so nobody is misled. Here we go. Turn that down like that. All right. So the midpoint stuff that you have right here, just to clarify for everyone, is part of the TV trades range trigger. All right, you have to have TV trades to be able to access it. If we shut that off, then that's fine. You can still trade just like that. You have the background color. You still have the trigger with the background color. You just have to do the stuff yourself. You just have to say, oh, okay, well, this is what the midpoint is right there. So now I'm looking for a close on or above the midpoint. That's it. Same stuff. You just got to do it manually. So let me put that back on because it's easier. If you're in here, if you happen to be in here or you're in the morning session, you get to watch it for free. It doesn't cost you anything to watch it. It's as long as you're in the morning session, it doesn't cost you anything extra to watch it. Okay. Now that said, on the gold is where we ended positive for the morning session. And we had, these are the trades that we had on gold. All right, we started out here with a break even on gold. Again, if we had taken that, we'd have gotten 5 ticks in profit. But break even on gold, then we had a +5. Then we had a break even, then we had another +12 to get us up to 17. Then we had a break even, and then we had a +10 to get us up to 27. And that is where we ended it with the gold. Now, I missed this trade right here on the gold. This was a valid trade right there. Yeah, it was a valid trade right there on the gold. And I think that was it. Yeah, that was it for the morning session. I missed one gold trade in the morning session. It was a valid trade. It would have been a nice trade if I'd have gotten it. And there was nothing during the break. Right, so I'm looking at it during the break. I'm looking for things to close above when it's green. Close, start from below and close above the midpoint. Right. Look down here. It's got to come out of the oversold to be a trade. So we didn't have anything here during the break. The YM, we were back and forth on the YM a little bit today. Were we ever positive on the YM? Our high of the day, yeah, we were our very first trade on the YM. We got our goal for the day on the very first trade here on the YM. And we'll get back to that here in just a moment. Here, is this it? I think somehow it was this right here. We picked up 25 ticks on this. We got the arrow point in the wrong place, but we picked up 25 ticks on that first one. And then we stopped out on the very next one. That brought us down to 10. And then we had a break even there, another break even there, another break even there, another break even there. So we got a lot of break evens. Another break even there. And then we stopped out again, and that put us at -5. Then 2 more break evens. Now, if you had taken 5 ticks on every one of those break evens, 1, 2, 3, 4, 5, 6, 7, that is the difference between being positive and being negative on the day. But anyway, at that point, I believe we're at -5 in there. Or actually, when we stopped out here, we're at -20. That was at the end. We were at -5 after this last stop out before that. That one, I think. So from 25 down to 10. Right there, down to 10. Then we went from 10 to -5 right there. And then I don't know where the other stop out was, but there was one more stop out to put us at -20. And that was where I ended it for the morning session. There was one more stop out in there I don't have marked. But I do have marked on the totals. So we're -20. This was not a trade here. This was not a trade because it didn't make it into the overbought. This, nothing. Now looking for shorts and nothing. Now looking for longs again and nothing. And longs again and nothing. So there was not a whole lot going on there. The ES, we had just a couple of trades on the ES today. And this one I screwed up. I should have had my stop at break even on it. And it ended up stopping me out. And that was the difference right there between positive and negative. Almost. That That was minus $125 a contract. Minus 10 ticks. Then we picked up 1 tick there to get us to minus 9, and we had to break even there. During the break, let's see. During the break, starting right here. Nothing. There's a trade right here that would have stopped out during the break. One stop out during the break on ES. Now, the NQ. There were a ton of bars on the NQ comparatively. We just did not get that much movement today. We started out with a stop out here on the NQ. I'm sorry, the very first trade on the NQ, we got a +8 right here. We got a +8 on that one. Then we stopped out, went to minus 17, had a break even, a break even, a break even. Then another stop out, went to minus 43, a break even. Then another stop out, went to minus 68, then a break even. Then we picked up 8 ticks to minus 60. Then we stopped out again to minus 85. Then we picked up 4 ticks to minus 81, and 8 ticks to minus 73, and I think 20 ticks or something like that. We're from 73 to 57, so it was 16 ticks. And then we went from 57 down to 37. This was a 20 tick trade. And that is where we ended it, at minus 37 on the NQ. At the end of the session, we were waiting through here. I let it go all the way to 11:30, and we didn't end up having a trade. Right here, right after I stopped watching, there was one NQ trade right here you could have taken. I didn't get. And there was an NQ trade right here. That would have worked out. So 2 NQ trades that would have worked out. And this would have been a long trade right here. That would have been okay. This would have been a long trade here. That would have been okay. And that was it. So 4 NQ trades. Now, early on, you see there were a whole bunch of break-even trades, but there were a couple of really nice trades that I missed here early on. This one right here was one. This was one. No, that was one. But this was one right here. And this was one right here. I missed those 2 nice trades right there. Again, difference between positive and negative. But it is what it is. We ended the way we ended. And all right, so let me minimize this now, and here you go. Let's see if we have any trades right now. But again, if you haven't taken a free trial, go here to mytradingiq.com, click on the purple button, no credit card required. It's going to bring you to the registration page, just fill it out. It gives you TradingView login ID. If you don't have TradingView, click on this. It's going to bring you to this page. Follow the instructions in this video. If you have not rolled over yet, because it's rollover week for the indices, you can go here to trading platforms, download this file right here, unzip it in this folder, put all the stuff that's in it in this folder, and then just open that chart book, and all the DOMs will be preloaded for you. All right, it'll be pre-rolled and everything else. Everything will be ready to go. All right, again, go here to trading platforms, mytradingiq.com, trading platforms. Download this for the December contracts. Okay, for the Sierra guys. And that's it. So now we'll see if we have any trades in the next 17 minutes. I don't know if we will, but we'll give it a shot. By the way, when you look out here, none of the option stuff that I wanted to have happen happened yet. We just had the puts right here that I bought last week, and they expire on Thursday. Close of business Thursday. So we'll see what happens here today or tomorrow. So far, it doesn't look like anything's going to happen. So they might expire worthless. None of this stuff seems to be happening, and that's really odd that none of it is happening. I think there's enough other stuff that's happening to keep the price inflated the way it is right now. But, I mean, we put in new all-time highs 4 days in a row. It's going to drop. And, well, I own the puts, so we'll see what happens. And let's see, this other guy out here, this is up pretty good right now. He is up 307. And the big news on that comes out on Thursday. All right, that's when the first ETF is going to go live. Now, what kind of an advance did Bitcoin have when its first ETF came out? It was BlackRock. I think brought out the first ETF on Bitcoin. Curious. Anyway, we are looking for, if you have a green background, we have to be coming out of the oversold off the midpoint. Okay, that's all we're looking for now. And all right. Does anybody have any questions about anything? Anyone? Anybody? No questions? None? All right. So what we're waiting for here, now we've gone full cycle from overbought to oversold. We need to come out of oversold and go back into the overbought and come out of the overbought. So we need 2 up closes from where it is, and then we need to bounce off the midpoint with a down close. Over here on the NQ right now, the way the NQ is right now, we need a down close on this bar and then an up close on the bar after it. Okay, a down close on this would put us into the oversold, and then the up close on the next bar would put us into the trade. The gold is pretty much the same as the NQ right now. We need a down close on this bar and an up close on the bar right after that. Yeah, it's on. It's on. There's just nothing happening. We're pretty close to a trade right here on the YM. We need a down close on that. We need an up close. And we need a down close first and then an up close on the gold. The YM didn't actually hit the midpoint, so I would take a down close that pulls back a little bit of a retracement on the down close. We need a down close over here on the NQ. We're not getting that. We need 2 down closes here on the ES plus an up close. So the market's just really, really slow. Not much going on here that we can do anything with, really. So just waiting, anticipating, hoping some sort of something. There's the down close on the NQ. Now we need an up close on the NQ. Okay, so the low of this bar is 33.75. So 38.75 is what we'd be buying on that. Okay. On the YM, the high of this bar is 122. So you'd be selling 12. Well, actually, I wouldn't sell 12. I'd let it close down and then pull back. The NQ is pretty close to a trade here. The gold did not turn into a trade because it did not close down and get into the oversold. So we're just looking at the NQ now. YM looks like it moved up one more tick, so YM could give us a trade on the short side while the NQ is trying to give us a trade on the long side. And there it is on the NQ. Here it is on the NQ. Yeah, we need 10 ticks in profit, so it's going to get up here to 40. It's about to stop to break even. Okay, now the swing high is at 38.75, 38.50. That's it. Okay, the swing, I'm sorry, the swing high is at 41.50, 41.5. All right, so we need 10 ticks in profit on this. Almost. One more, there it is. Okay, so stops that break even on the NQ. Still waiting on the YM. Stop at +4 on the NQ. It's getting up to the swing high right now, so stop at +12 on the NQ. And it went through the swing high now. +20 on the NQ. 24 on the NQ. 28 on the NQ. That's our best trade of the day right there. And that's it. 28 ticks on the NQ. And that was a pretty simple trade for everybody to follow along with. The YM is about to give a short right here. So 128 tick trade here on the NQ. That was an easy trade for everyone to follow along. Okay, so think about if you didn't have the midpoint thing on here, you would have had to have drawn midpoint like this. Okay, it would have gone like that, is what your midpoint would have looked like. So your trade would have been from right here, same thing, right there, move up. And if you didn't have the thing that I'm letting you use for free in here, it would have gone like that. If you didn't have it, it would have gone like that. Okay, so a bounce there, and the bounce that we took right there. Okay, but you'd have to draw all that stuff. Or just use it for free. Now we've got a high here of 130 on the YM. We're going to sell 120 on that. Okay, this is what it looks like on the dot. So we need a down close. It's going to pull it out of the overbought. I'm not really loving going short here while the other indices are going up. So I'm hoping it's going to close up and then the next one will close up too and we won't end up with a trade at all. But the trade is set up right there. Okay. The gold, we needed a down close. We needed that to get into the oversold. Now, the alternative to drawing those fibs over and over is you can just eyeball it. You can say, this is how far up it went. This is what it should pull back to. This is how far up it went. This is the midpoint. This is how far up it went. This is your midpoint. That's the other alternative. That's what I did for years. Right here in front of you. And I made it easier for you. Easier for all of us. Hey, we're back to another trade here on the NQ, potentially. The YM did not trigger yet, but 38 up to 43. My brain working. 38 up to 43 on the NQ. You see, from here to here. If you drew this. Oops, we wouldn't be drawing. Yeah, there it is right there. From there to there. The midpoint's already done for you. Right, the YM is still not traded. We need a down close here on the YM. The gold needs a down close followed by an up close. It's going to mess it up kind of if it does the down close, and now it just flipped to YBR. So the gold's got nothing. The NQ has a potential for another trade here on the upside. The YM's got a potential for a trade on the short, and the ES has got nothing. So that is where things stand right now. Yeah, where we're sold here, we need that to pull back up and hit the midpoint. Or if you're drawing it, you'd have to draw it like that. Kind of keep track of it. Okay, so there's a potential trade over here. Now 7 and change, add 5 to that. I'm glad the YM did not trigger. I hope it goes up 2 more ticks and then it won't be anything at all. If it goes up above 34 to 34 or above, 1 more tick and it's not going to be a trade. See, I had it waiting over here. There it goes. Okay, I can cancel this thing now. I really didn't want to go short on that. The NQ now might not be a trade. It's not going to be. The NQ is not going to be a trade. I'll cancel that one too. Now, the reason I know it's not going to be a trade is because this is at 39 and the low of this bar is at 33. Add 5 to that, it's going to be 38.50. That will put you right here. That is below the midpoint. You're not going to want to take that trade. You're not going to want to take that one. It's a new sequence I figured out. Most of the time, we'll let you know what the next bar is going to do before the next bar opens up. I can tell you, the next bar right here is likely to go down. The next bar right here is going to be a down close. Next bar right here is going to be a down close. This one is kind of messed up, but it's suggesting next bar will be an up close, but it probably already is. The next bar right here, be a down close. See, it's doing that on up closes that it's suggesting that. Okay. This one right here, that's probably an up close. That's probably a down close right there, suggesting the next bar is going to be an up close. Probably in a down close right there, suggesting the next bar is going to be an up close, and it was. Stuff I'm working on. Anyway, we have right here on the gold. Also, we ran out of time. Ran out of time. A down close here on gold would be a trade, though. Okay. Now, if you have not taken a free trial with us, go here to mytradingIQ.com, click on the purple button. There's no credit card required for the trial. All right, no credit card required for that trial. Just click on that. It's going to bring you to the registration page. Just fill out the registration page. All right, down here at the bottom gives you TradingView login ID, so we need your indicators indicating on your desktop for you during your trial. That's really where you want to be. If you have trouble rolling over your Sierra, go here to mytradingIQ.com, click on trading platforms, because we rolled all the indices. So if you're having trouble with that, go here and just download this right here. Right? Follow these instructions right here. Put it in this folder, open it up, and take everything that's in it and put it in this folder. Then refresh your Sierra charts, close it and open it back up, and go to Open Chart Book. And you'll have this new chart book in there. TIQ DEC. Open that chart book up and you'll have all the DOMs all set with all the stuff in it. Like right click and I'll have all these things set up for you. All the brackets will be up there. Everything will be set for you. Okay. All right. That is it. With that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Okay, recap of the morning session.
Today it took 3 minutes and 2 trades to get to $1,650 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, we made it through all the individual markets already. If you missed it, about 45 minutes after I sign off, you can go to youtube.com/CFRN and you can see the entire broadcast in its entirety. Here's one last look at the daily. We got a little doji here. We made quite a run up, putting in that new all-time historic high. Yesterday we had an all-time historic intraday high and an all-time historic closing high. Now, yesterday we closed at 66.74 1/4. And we're right at that area right now. Where are we? Let's see. 66. Yep. No. We would need to get just above the zone, into the zone, 74/75. We would need to get above that. Actually, we would need to get above the BBC to put in a new all-time historic closing high. And of course, the Fed is tomorrow. And so, as you saw when we went through the numbers from around the world, things are quiet in Europe. Not so much in Asia, but definitely quiet here and in the red. So, in fact, let's do this real quick. Let's run through those numbers, just the US numbers, one more time. Dow's down 111. The Nasdaq's flatlined. S&P 500's down 4.5 points. The Russell 2000 is down 8.5 points. Pretty quiet. Pretty quiet. And I can't think of any impetus. Now, notice that the black step line is directly above blue and climbing. Once it crosses to the right side from the left side, that typically signals a retracement back to the BBC. So, now this area here, where the 50% fib extension is resistance, 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 resistance. We got above it, so on the retracement, it would be surprising to see it serve as support. Now, what people are really going to be listening for tomorrow during Jerome's press conference, is he lowering rates because he fears a recession, or because the economy justifies a rate cut. Panic or rational. That's what everybody will be listening for. I just posted some good information in the Breeze channel. So I think you would do well to read that. Don't recommend you trading the Fed, but there's some real good background information as to how the markets may react. And remember, the first move is noise. The second move is the truth. And that's the truth. To become a member, email Valerie, support@cfrn.net. Let her know you want to become a member. She'll send you all the information you need to get signed up. Once you're signed up, she'll then send you more information, everything you need. Create a folder in your email client and just put all those emails in that folder because you will need them. As a passport holder, you're going to get 2 hours of live interactive training every trading day. On top of 2 hours of group training every day in live markets, real trades, real money, you'll also be able to access private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter because price flows the same across all markets and all time frames. Just as I showed you today as I went through each and every individual market, price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's just simply how markets work. As a passport holder, you get the Logic 247 alerts around the clock. The concierge trade alerts, the second they're published each evening, typically 5 minutes ahead of the Globex Open. Every Monday morning, you'll get the weekly trading zones at 6:15 a.m. Eastern. Every Thursday afternoon, you will get an invitation to attend the members-only workshop, which is held every Thursday night at 8 p.m. Eastern. And last but not least, you'll get the golden keys that opens all the private channels in Telegram. When you're on the trial, you have access to the public channel, so you can get the alerts and the weekly zones and chat with our other members. But once you become a member, you'll have access to everything in Telegram. Everything a trader needs, all under one roof, one low price. All right, let's wrap it up with our good word for today. Showing grace under fire. Romans 12:18. Do all that you can to live in peace with everyone. Author Chuck Swindoll says that when he was a young man, he couldn't understand how two people who loved the Lord and believed the Bible could come to different conclusions. In my 2x4 thinking, I was convinced that all godly minds held identical conclusions. I soon discovered that there weren't only various opinions, but God had the audacity to bless those who disagreed with me. He isn't nearly so narrow-minded as many of his people. God's much easier to live with, tolerant, full of more grace and forgiveness than all of us. In order to show grace under fire, you must understand and accept these two things. Number one, people's opinions and convictions will often differ from yours. Yes, you must never compromise Bible truth and core values, but it costs no more to be tactful and gracious than it does to be critical and caustic. And that's especially true when confrontation and correction are called for. Paul writes in Galatians 6:1, "If another believer is overcome by sin, you who are godly should gently and humbly help that person back onto the right path." Pay careful attention to those words, gently and humbly. And number 2, everyone's perspective has some merit. When you grow up in a home that functions on a right versus wrong justice scale, the person who is right gets praised, while the person who is wrong gets put down. And that's a pity, because generally it's not an I'm right and you're wrong issue as much as it's an I see it this way and you see it that way issue. So before you go to war, ask yourself what's more important: your need to correct this person or to connect with this person. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.